Right now, the world thinks it's watching an oil crisis unfold. And on the surface, it makes total sense. Energy markets are volatile, gas prices are creeping up, and governments across Europe and Asia are holding emergency meetings. All of the panic can be traced back to one tiny, 21-mile-wide strip of water, the Strait of Hormuz. It is the only sea passage from the Persian Gulf to the open ocean. Every single day, roughly 20% of the world's oil flows through it. The general consensus is simple. If this choke point closes, the global economy is totally finished. But that's only the story you're being told. The truth is much more calculated. Because while some economies are about to get crushed, others are quietly positioned to win. This isn't just a story about a crisis. It's a story about the ultimate geopolitical leverage. Most people still think it's 2004. Back then, instability in the Middle East meant an immediate oil shock that would cripple the U.S. economy. 20 years ago, America imported nearly 60% of its petroleum. When supply stopped, the U.S. stopped. But that version of the world doesn't exist anymore. Over the last 2 decades, something changed. New drilling techniques unlocked massive shale reserves, and production boomed. Today, the United States isn't just energy independent. It is the largest oil producer on the planet. This means the old narrative is officially outdated. Now, the United States isn't on the same side of the trade anymore. So, the question becomes, who is actually at risk? This is where it gets interesting. Only about 2.5% of the oil moving through Hormuz is headed to American shores. The vast majority, over 75%, is going to Asia. Specifically, China, India, Japan, and South Korea. When people say a disruption here will shock the global economy, they aren't wrong. But they are missing something very important. It's an asymmetric shock. For the United States, an oil disruption is a price problem. Since oil is globally priced, gas gets more expensive at the pump. It's annoying, and it causes inflation, but it's manageable. But for Asia, it's a supply problem. And those are two very different things. A price problem slows your car down. A supply problem shuts your factories off. This is where the story shifts from crisis to positioning. When supply tightens and prices rise, it creates winners and losers. And right now, the United States is on the winning side. Higher prices don't just hurt. They generate massive revenue for producers and energy exporters. The same shock that's creating global pain is actually stimulating the U.S. economy. And it's not just oil. It's natural gas. The Middle East exports 20% of the world's liquefied natural gas through that same strait. And guess who quietly became the world's largest natural gas exporter in the last decade? The United States. One region loses supply, and another steps in to sell it. Scarcity doesn't just create risk. It creates opportunity. So, who is the biggest loser in this scenario? It's China. Beijing saw this coming. They've spent years diversifying suppliers and building strategic reserves. But they haven't eliminated the risk. China is the largest importer of oil in the world. They consume 15 million barrels a day, and a huge portion of that still has to flow directly through the Strait of Hormuz. In the short term, China can probably absorb the shock. But if the disruption lasts, that's when the real problems begin. China's entire economy, from manufacturing to global exports, runs on a constant flow of energy. When that flow stops, the pressure builds. If you zoom out, the timing of this entire situation looks strange. Right as tensions around the Strait of Hormuz started escalating, trade negotiations between the U.S. and China were reaching a critical point. Whether it was tariffs or technology restrictions, the relationship between the world's 2 largest economies has been unraveling for years. Maybe the truth in this conflict isn't just about oil. Maybe it's about leverage. Leverage comes from pressure. Economic pressure, market pressure, and energy pressure. When you look through that lens, the Strait of Hormuz stops looking like an energy story and starts looking like a masterclass in geopolitical power. Because if one country can tolerate the shock while another country feels the structural collapse, the shock itself becomes the ultimate bargaining chip. The Strait of Hormuz isn't just a choke point for oil. It's a choke point for power. If you found this analysis insightful, please subscribe to receive more such informational content.